Hi, welcome to our 2-Minute Tuesday for August 15th of 2017. Our title for this week is The Old Two-Step, One Step Forward, One Step Back. Thanks for joining us. This is Roger Balzer of Balzer Wealth Management. Over the course of the past couple of weeks, the markets have taken one step forward and one step back. Just within the first 2 weeks of August, the market has seen new highs followed by an abrupt pullback. What I'd like to do this week is take a look at the three sets of market indicators that I use. First one is short term, second is intermediate term, and the third is long term. The short term indicators basically tell us in the very short term the direction of the markets. It's kind of like a weather forecast. The short term indicators are kind of useful as a 3 to 5 day forecast. At the moment, the short term indicators are very bearish right now. The intermediate term indicators are very constructive. They're very sloppy right now because one of our main indicators, the New York Stock Exchange bullish percent, has been controlled by supply ever since March of this year. So that one's kind of got us worried, but it's not a deterrent for us as investors. The long-term indicators are all giving green lights. They are all very bullish. It's very constructive. It's much like what we saw in 2013. 2013, we had a few slow periods and a few pauses, but all in all, it turned out to be pretty well. When our long-term indicators are all giving green lights, this tells us that if we see any kind of pullback in the market, we should expect the pullbacks to be very short and be very shallow. Could be a good possibility for adding to new positions. Right now, again, all of our long-term indicators are flashing all positive. This doesn't happen very often, and it will not last forever either. But this is the current backdrop that we're looking at right now. Please keep in mind the picture is always changing. But I'd like to conclude with reminding you, just because the long-term indicators are very juicy right now doesn't mean that the market's going to continue going straight up. We are going to have some pullbacks in this marketplace. Remember, there can be a pullback in the market of 5% at any time for any reason. We're not investing to miss that 5%. What we're investing for is to miss the market like we had in 2008 or we had back in 2000. Our current indicators tell us that the current direction is an advance, not a crash. It was a little recent pullback. If you'd like to touch base with me or follow me on Twitter, we are at Balzer Wealth. And starting within the next couple of weeks, we're going to have another blog that's called The Next Door Investor. And basically what this is being put together right now, it's going to deal with a little bit more things that are not so much technical. Try to put on a few of the things on a daily basis that I'm seeing happening out there, and also what I have been reading. And kind of trying to get you a little bit more of a flavor. We'll continue to do the 2-Minute Tuesdays though. Remember, if you have any questions or would like us to review your personal or retirement account at work, please just get in touch with me. Give me a call at 440-610-3012 or roger@balzerwealth.com on the email. As always, make it a great week.